gave two directional biases yesterday based on the fact that when you're playing on lower time frame these days, the way price the way price played around on lower time frame is somehow corny these days. So we just have to flow with whatever price is going to do. And if you check on 4 hour, you see how price is just moving from range to range, trend for a little while, go back into tight range, just trend at orders. It's trending at the orders, it just give us an impulsive movement at orders. This one very late at when market has already closed. This is 6 p.m. candle. Started at 6:01. So, and almost everybody, though, uh, that might fall around the afternoon in the US, New York session. So, but nonetheless, we are not expecting or anticipating last candle of the day to give us last 4 hour candle of the day to give us this type of impulsive movement. Neither do we expect an impulsive movement like this very early on Sunday, for that matter. We have this candle on Sunday first opening candle of the something, which can translate to gap and all, but we shouldn't have a gap and at the end of the day still be experiencing a ranging market during the market hour. Imagine when London and New York is opened and at the same time we are having something like this. And as you can see, we've been ranging. Price has been ranging, just trend a while and range for a long period of time. But is common and with a lot of issues that are going on around the world these days. So uh on lower and that's the reason why on lower time frame when I give trades, it has to be what is it called? Observing whatever price is doing because we kind of want a situation whereby price leads and we follow. And that's the major mantra that it should be. And sitting closely with price every day, what I've observed is these two pattern here. These two pattern, and if we take out all annotation, turn it to line, you will see exactly what I'm talking about here. We have a range. It will take the high of the range, take the low of the range, pretend as if it's going down, break the low of the range, and go back up, takes it out, and continue to move in the high direction. If you look closely, it's almost every day that it's doing that. If you look around, if you check any dealing range that we have within the market, it's not showing clearly here. If you check the dealing range, you see that it's going to take the low first, pretend as if it's going higher, then to just come down. So if you look, it has been happening for a while now. I've been observing it. Whichever range it is, either small or high. So let's go back to candlestick so that at least we'll be able to see it clearly. So no matter what the dealing ranges happens to be on on in London session, maybe the first one immediately after the something opened, then we're expecting something like that in the market. Yesterday it did the same thing. As you can see, we have this daily range. When I was doing analysis, I showed us we have this daily range. Price trade above it, take the low, still break the low as if it's going down, then reverses into the high. But as you can see, it did not give us uh, any entry opportunity within the market. So we just have to let it be. So here we are today. Let's go back to I use Panda for my analysis. So let's quickly do some little analysis. There is nothing much for us to do on 4 hour. As you can see, since we're already in tight range, our price is just the break above this high, then we can see there is no break above this candle here. So price is reversing currently. So what are we expecting from the market? Here is an internal structure that we might be anticipating that price might choose. Here we have less than 15 minutes for this candle to close, then we might be expecting, thinking that we're going to have. And if we look closely, if we are to do structure from this level, here will be the level, here will be our low in the market, which is going to be our strong low, and here being our weak high. Let me expand. Okay, so there's no Russian, no Russian now. So here is going to be our weak high that will be expecting and anticipating price trading either above or below. So uh, yeah, so here happens to be at the near range, but there is something we can spot from within the zone. Within the level, we have a shift in the market. Even though here this happens to be an inside bar, but the inside bar was traded above and closed above. But it's happening, all these ones happen during Asia that we are not in the market. But you can clearly see that here all these ones happens to be shifts. So you can see because this low, that's major shift in the market, major MSS. And here we have this is the leg that sponsored that high. Then we have a trend change from that. That's a structure break from that level going down. So since we have a trend change here, automatically becomes our expected level, which happens to be uh, internal structure. So and also serving as a mitigation block for this level. But mind you, we have another level here that we might be expecting some kind of something from. So price might just come to that level, and from there we can be expecting that we might have a reaction to this level before price continue to come down. But under normal circumstances, since price when it has been transferred from this level to this high, it is this high that I'm actually expecting to be protected, and here happens to be a mitigation block. So we'll be expecting price coming back into this level for us to have a lower prices in the market. And for whatever reason, we did not have the next 4 hour candle. We didn't have this internal structure being properly mitigated before we come down. Then automatically we might be expecting that price might not give us any movement lower. So that being said, that's our expectation on something. And as you can see, having this internal structure there, we have the internal structure being properly mitigated from 4 hour, I mean from on 15 minutes. But with the proper mitigation, the price has not been delivering very well from this level. So if we are to take any delay range from this particular level now, it's going to be from this high, the high that we have here, and that will be the high in the market, and here is going to be our low. That will be anticipating price being either traded above or below. So whatever makes us to close below, and don't forget, so since we've been working through all this level, there hasn't been any break of structure that has happened here. And as you can see, here is going to be determined price, except we still create another wick below this low. Then we wick through again. That wick is going to be our low, except we close below the last wick here. So this will be our daily range. And as always, are we going to be expecting? Our expectation is expecting price either from this level, trade above, take the low, still continue to go into the ice. Or it can continue to go into the ice from that level. Anyway, we can trade above this daily range, form and take the low again before we continue to go into the ice. And the same thing can happen when we can still trade below here first, take the trade above, coming back into the internal structure and creating a shift and continue to move lower. So that's another expectation in the market. Anything can happen, but we have to flow accordingly. It forever we price deliver itself. Yeah. So thank you very much. Have a lovely day, Prophet.